Okay, recording this video on Saturday, the 12th of August 2017. Hope you are doing well. So, last couple of days I've been getting a bunch of messages from people saying, where the hell are you? What's up? Why no videos? And so I'm back. And the reason for no videos is we had nothing going on. For about 3 weeks, the range was just crap, the speed was crap, and frankly, I just stopped trading. For me, here's Sydney time zone at the moment. It's pretty horrible because my day trading day starts at 11:30 at night. And I was staying up to like 3 in the morning, and the thing was moving like 6, 7 points in the day. It's just ridiculous. Anyway, so finally this week we have range, speed, volume, everything's good. And it's all because we're worried that the market's kind of overdone. We're worried about North Korea. We're kind of out of the summer doldrums to some extent. And September is, upon us soon at least. And September is usually a great month for trading. Anyway, so that's what's going on. Just no trading, so no videos. But that's not to say that I have not been inactive in the meantime. There's plenty of stuff to be doing and seeing. Working on another business that I run kind of on the side. Also, the crypto stuff, the cryptocurrency stuff has just been fascinating over the last couple of months and been getting more and more involved in that. I think that's, day trading has gone in several waves over the last, 15, 20 years. We had obviously all the dot-com stuff leading up to 2000, 2001, where people got more and more active in day trading stocks on NASDAQ stocks. And then that kind of all went away. And the next thing that kind of came along was the Forex boom. And we went from a period where we had pretty range-bound Forex markets to, Forex markets that started to move significantly. And change kind of fundamental values. And so we had a whole period of very active day trading in the Forex markets. And to some extent, that's kind of quietened down a little bit. But the thing that's happening right now is the day trading of cryptocurrencies that's going on. And huge amount of that happening out of China, Korea, and Japan. The Europeans and the Americans are kind of a little bit asleep in terms of cryptos compared to what is going on in those Asian markets. And frankly, I'm fascinating. The moves are huge during the day, and so it's kind of an area that I've been exploring to some extent. And maybe we'll release something or do something about that in the next several months. Anyway, so I'm talking with some people who can help me on that. Before getting onto the charts, this is going to be a bit of a rambling video, and I apologize for that, but I haven't done a video in a long time, so a lot to say. But there is a little survey form below this video where we're thinking about launching the better indicators for another platform. As you probably know, they're released for TradeStation, NinjaTrader, and Multicharts. Multicharts was not a great deal of work, but turns out there are not a lot of multi-charts users out there, funnily enough. But anyway, we've gone to the trouble of doing it for 3 platforms, and I'm thinking about going to a 4th platform. But for the life of me, I don't know what's next. People email from time to time say, yeah, how about Sierra charts? How about Think or Swim? How about MT4, MT5, whatever? So if you could help me out, if you are interested in the better indicators for your charting platform, have a little go at the survey, kind of fill that in. If I've left off your charting platform, you can add it on there and kind of vote it up, and we'll see where that goes. I'll tell you what the results of that are in the next several days or so. Anyway, so there's going to be a lot of charts in this video because there's a lot going on. We have another of these kind of secular changes kind of going on. I want to talk about the rotation indicators to show you what's kind of going to be the next wave of markets that kind of come to the fore. But before talking about that, let's talk day trading. Let's talk E-mini. So first of all, this is my range chart. where high, medium, and low range bars are shown. Just divide them up into buckets of 3. It looks back over the last 99 days. 33 of the days are low range, 33 mid-range, 33 high range. And you can see that was the last kind of 2 weeks activity where we had all of these yellow bars which show small range. And look at these ranges. I mean, it was just, well, everybody knows, it was just awful. This was 5.25 points during the day. It was just, I just don't think you can, well, I know you can't. I get myself in a hell of a lot of trouble as soon as the range kind of compresses. Anything under 10 points, I find a little bit kind of tricky. Although having said that, Friday's activity was 10.5 points, and I had a ripper of a day. So, that's about the limit for me. But as soon as it goes under 10 points, forget it. So, everybody knows the story that the ranges have been compressed, but now we've kind of busted out of that, and I think we're going to have good trading for the next month or two. So let's hope that is the case, and let's kind of move forward. So day trading, Friday's chart. This is the MTF chart. This is kind of the more traditional view with better momentum down below, better pro-am on the bars, and then we've got the sine waves as well. And then this is the system view of that, giving strength and weakness. Red bars showing strength, white bars showing weakness, and that was the beginning of the day, and there was the 11 a.m. window. And we had a really important kind of instrumental point with today's Friday's activity down here. So market kind of starts off, we go into this little burst of activity to the upside, and it ends up being a beautiful little end of trend on the intermediate time frame. We had a pullback to end of trend on the lowest time frame, then pull back to end of trend on the intermediate time frame, syncing up with cyclical resistance on the highest time frame. On the system view, you can see those two signals there. That's an early end of trend on the lowest time frame, tiny little dot, intermediate size dot for the intermediate time frame, all happening there. End of trends, I talk about them rippling through the time frames. We hit a left shoulder with the lowest time frame, the head of the move usually with the intermediate time frame, but it's all happening around an exhaustion pattern and bearish divergence. So we had kind of maxed out around there. You can see some amateur up bars, and we fell into this downtrend. And this was a nice, fast kind of move to the downside. I was short into this, but a couple of things going on. On this left shoulder, we have these Rambo patterns, a couple coming up here. Rambo stands for potential reversal of an amateur breakout. That breakdown below support is being led by the amateurs. The amateurs are doing all the work kind of down there. We bounce off it a little bit and we come back again. Rambo pattern again down at these lows. And look at the reading. Better momentum, we're showing a pretty big reading down here. What did we get to? Let me try and see. Yeah, about negative 9,000 on better momentum, which is a big read. Anything over 8 is a big read. Didn't generate exhaustion pattern because we had one in the background that we needed to kind of supersede, but it was a big reading. Problem with that is big readings, exhaustion type readings being led by the amateurs are unstable. And so that's exactly what happened. At that point there, all the amateurs were driving the move, expecting us to drop through 36 and kind of get going on the downside and just like the day before have a ripper on the downside, but it was not to be. Let me just back it up. Because what happened is a really significant blue professional bar came in here. It was on the 1500 tip bar chart. We saw a couple on the 500 tip bar chart, and they held it at that point. It was also a cyclical support on the highest time frame. I know we busted through the cyclical supports on the intermediate and the lowest time frame, but remember, it was a lot of amateurs because the reading was big on better momentum. We know the average trade side was low because it was giving us our little amateur bars here, giving us Rambo patterns. So just be wary of that. And then as soon as it started to back up significantly, we had on this little dip a blue professional bar step in here. They stepped in another blue professional bar here. We started to break to the upside, and we knew that was it in terms of trending moves. We were going to back off against that. And what we did on the reverse side is go trip their stops. So all those amateurs that were short here, their stops are sitting 2.5 points away from their entry, and bang, that's where we trigger their stops over here, and that's called a Rambo to Rambo channel. So it was a beauty to reverse on the upside. We broke into strength here. We had a beautiful little low risk entry point come in on that retrace right there, and then we get confirmation that it's a break into an uptrend because of 2 time frames being broken at the same time. We get confirmed uptrend, bang, and we run to the upside here. And interestingly, where we ran to was almost identical pattern to the one pre-open. We have a look at these pullback to end of trends on the lowest time frame. It's a pullback to end of trend on the intermediate time frame. I think it's also a pullback to end of trend again on the lowest time frame, and that's the early end of trend on the lowest time frame, the intermediate time frame, and the lowest time frame again, all happening around cyclical resistance with an exhaustion pattern, bearish divergence, and flushing out the last of those buyers, bang, and we roll over and we go the other way. We've not had exhaustion selling on the downside, but it did signal that we basically have weakness after that because we've not been stopped by exhaustion selling on the downside. So that was a really nice trade. I was in long at 38.75, out at 45.25. There was maybe another 1 point in there for me, but that was 6.5. I was super happy with that. And when you look back at the end of the day and say, well, you know, the whole range for the day was only 10.5 points. That's a good trading day for me. So that's the day trade kind of example. I'll tack that on, which will make an extremely long video for today. So apologies for that. Now let me just have a drink of this coffee. All right, so let's look at a longer time frame tip bar chart. We'll look at the 4500 tip bar chart. So you do a multiple time frame view of this, and it gets you all the way up to a 40,500 tip bar chart in the highest time frame. This goes back a fair number of days. These are the open and closes of each of the days. The overnight sessions are obviously the narrow bits in between. And this is basically this week's activity, where I think that is Monday. Tuesday was the day where we knew that things were going to get interesting for the rest of the week because we had a blow-off move, exhaustion buy. There was a bunch of blue professional bars that ran all the way to the highs up here, especially on the day trading charts, and then started to sell it down, and that was the beginning of the move. So that was, when was that? That was Tuesday's activity. Wednesday's activity, shallow retrace, complex retracement on the way back, where we're just batting backwards and forwards between support and resistance, and then we fall into a really nice downtrend on the way down. And all the selling that went on here is mirrored by all the buying that went into that blow-off move on the Tuesday. So the blow-off move, exhaustion buy, it's a spike up there, bearish divergence comes in, we fall into a downtrend, bang, bang, bang. That exhaustion sell shows the strength of the selling, getting the move going. That exhaustion sell is then picking it up at the end. Everything that they were selling out down here, they picked up and bought up to kind of close out their positions at the end of this kind of large trending move. So that's been nice. We've had a little bit of an end of trend on the lowest time frame, one on the intermediate time frame. We've got this going on, exhaustion sell, bullish divergence, but it's still showing weakness at this point. All these white bars just showing weakness. We're breaking supports rather than breaking resistances. So we've still got to go test a little bit around this kind of area Monday, Tuesday, but after that, let's see where this goes. We could break into a little bit of an uptrending move from there. Who knows where this thing's going kind of longer term, if this is the end of the end or just the beginning of the end, I don't know, but we'll just kind of play the signals. A little bit more testing to go Monday, Tuesday before we have a bit of a rip to the upside where we kind of test wherever, test back somewhere at some point. And then we'll get another exhaustion buy. At that point, we'll roll over and so on. We'll just kind of see where this goes. So that's in terms of equity markets, what's kind of going on, day trading and swing trading kind of charts. Now, going to talk about the rotation indicators showing what's going on with the different asset classes. But first of all, we have to talk about the currencies. The currencies have been fantastic to the upside. And this is just showing you what the euro has been doing. Again, this is the detail with better momentum and better pro-am on this side of the chart. This is the system view where you've got weakness and strength. Weakness is in white bars, strengths in red bars. And it was a doozy, a beautiful setup with the euro currency down here. Exhaustion sell, bullish divergence comes in at 106. Then we start to break into an upside. We have a flushing out the last of the sellers, and then it's a low risk entry point comes in here. That's that little dot. Right on the lows there at 107, and then we rip to the upside. 10 or more points to the upside on the euro, which has been fantastic. But we've got a little bit of a left shoulder being made on the euro because we've got exhaustion buy going on here. So the exhaustion sell that we have is being mirrored by exhaustion buy on the other side. So the easy money's been had. This move from here to here has been great in terms of range and speed and all of those things, but we've reached a little bit of a local high for the time being, and we're just going to be a little bit more range bound. But we've still not put in pullback to end of trend on the low or the intermediate time frame. There's one on the highest time frame, but we busted through there. We've got to see bearish divergence before it rolls over. But so I think in the next several weeks we're going to be putting in all of those patterns with the euro. So we could break a little bit higher for sure. We could retrace a little bit more for sure, but it's going to be choppy in the euro. And so for the time being, it's kind of the easy money's been had in terms of the euro. Dollar index obviously has the reverse of that, with exhaustion by bearish divergence and the end of the strength. Although those pullback to end of trends, we break into a downtrend. We had that perfect little retrace into a low risk entry point up here at 101, 101.5 on dollar index, and then bang into this downtrend. But we have not had exhaustion sell on the downside. Better momentum here hasn't shown a similar exhaustion buy pattern that we had here. We put in one little end of trend on the lowest time frame. We kept on going through it. We've got to put in pullback to end of trend on the intermediate time frame. So it's still on the way down. We've still got to put exhaustion sells on the way down on dollar index. But just like the euro, I think it's just going to be a little bit more choppy on the downside. But it's certainly not over until we see those kind of patterns kind of going on. So I don't think there's much kind of in terms of opportunities on Aussie, Canadian, Euro or whatever, or even short dollar index. I actually think the opportunity right now setting up is Japanese yen. And so Japanese yen, we had our exhaustion buy into a flush pattern, pullback end of trend, broke into a downtrend. Another beautiful little low risk entry point. There's that low risk entry point signaled there. We should have got you in at that resistance there just at parity versus this is the futures index. So you multiply this by 100 to give you kind of the Japanese yen versus US dollar. But anyway, that parity level there would have been an interesting kind of short entry. But we're down at 86. We found support. Cyclical supports come in. We've got exhaustion sell on the downside. We've got a bullish divergence coming. We've got a flush going on here. We've spent quite a lot of time, really most of this year, just in congestion between those support and resistance lines. But what's happened lately, last couple of days, bang, we've broken out of this. 2 time frames broken at the same time. We've got confirmed uptrend going on at the moment here. That's been in place for quite a while here. But now I think we've got kind of everything in place. You can see here blue professional bars towards the lows of this move. We're potentially breaking out of this congestion zone here, and we're breaking through resistances on the low, intermediate, and the highest time frame. So that's a triple break, so that's important. So I actually think the opportunity for currencies, for a currency overlay for the next couple of months will be long Japanese yen. So that's what I'm going to be doing. Next, let's talk about the asset classes and the rotation indicator here. This is really handy for showing what the leading asset classes are. They're towards the top of the channel, and the losing asset classes are. So you can see over the last year, the beginning of this year, what was doing well was commodities in this deep blue color here. And that's where we had, it was effectively a false breakout in crude. Commodities mostly driven, a good percentage of that ETF in the commodities is like 85% of it is crude oil, natural gas, and then it's little other things kind of on top of that, copper, coal, blah, 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 all of those currencies. But the big driver there is crude oil. So that was, it seemed like it was kind of good to go. And I was long OIH and it just went nowhere, fizzled out and kind of went the other way. And crude went from being top of the heap to bottom of the heap, kind of down here. It was the worst performing asset class. But lately, it's bounced back into the middle of the range, and it's starting to look interesting. Not yet, quite yet, though, I think. And I'll show you the charts on crude and natural gas, and we'll just see if it's kind of lining up kind of yet. So crude is looking interesting, having it been, for me, a bit of a null kind of trade. Then we had emerging equities kind of come to the fore, and they went from kind of bottom of the heap. They were down here. You can see in this grey color, they were the worst performing asset class in 2016, down there, second quarter. And they bounced around a little bit. They came back again to being the worst performer, and then they've been a spectacular outperform for this whole 2017 so far, where they've been kind of top of the market here. And I'll show you the emerging markets kind of chart. So I rolled into RSX, which was Russia. The nice thing about Russia was it was an emerging market, but also with a large exposure to oil and gas. And so for me, that kind of was a nice play. But then when it kind of fizzled out, made a good gain, 10 plus 12% kind of move in RSX. I kind of jumped out of that and instead jumped into MCHI, I think it is, which is China. Wasn't the leading performer in the emerging markets. I think Korea, Taiwan, India have been kind of better performers in that EM space, but China was still good. And I got scared out of that trade about 10 days ago, and it kept on running and running. But with the activity over the last couple of days, it took a dive. All of the emerging markets over the last 3 days have been severely hit. And so I'll show you the emerging markets chart, the EEM, which is kind of the composite of all of those emerging markets. So you can see where that's kind of maxed out. So my view, emerging markets for the time being is kind of maxed out. You can see here, this is equities, this is S&P 500. Again, I think that's as much as we're going to do for the time being, because what is starting to get interesting is gold. Gold and silver, platinum, kind of the precious metals. Here they've started to rock up. Government bonds, I think they're going to continue to be at the bottom of the heap. I'll show you that chart kind of shortly. Real estate, nothing going on there. Corporate bonds, jump bonds, nothing going on where there. The interesting ones are, there'll be some weakness in emerging markets and equities, potentially, but the things that are kind of moving ahead are gold and silver, platinum, and potentially the commodities, the kind of oil and gas, and I'll show you those charts now. So here's EEM, which is the emerging markets, kind of the composite of all the emerging markets. And there we go, having basically bottomed out with exhaustion, sold, bullish divergence, beginning of 2016. We had an exhaustion buy, getting the move going. And then over the last month or two, we've had exhaustion buy, bearish divergence, and we maxed out there. You can see all those red bars, showing strength and uptrends, and it's just reached a little bit of a peak at a previous level, kind of up here, that it found resistance, kind of dropped off from there. So there we go. That's our exhaustion buy and our bearish divergence, and it's been a little bit of sell-off. That has been an extreme sell-off in MCHI, which was kind of the China ETF, and a couple of others that have been whacked down pretty hard. But it was very good going while it was on its move upwards. But I think its time has come, and it's going to be a little bit harder. Maybe there'll be an opportunity to kind of come back into this, and we'll just have to wait and see. But for the time being, it's kind of maxed out. Gold and silver, however, and platinum looking interesting. And here's the chart. So we had this really nice uptrending strength move. Red bars are strength on the MTF chart. Played into end of trends, exhaustion buy, bearish divergence, flush patterns, and then we drop into a downtrend. Not unlike the Japanese yen chart as I'm looking at this. So we had that big drop off into exhaustion, sell, bullish divergence comes in, and we've been range bound here. But you can see we've put in some flush patterns, flushing out the sellers at these points, and now we've started to break into uptrends. Here, broken above resistance on the low, intermediate, we've got the highest time frame kind of going on there. So gold potentially looking interesting at this kind of just under 1300 at the moment, and we could see where that goes. One of the reasons that's looking interesting is because as soon as we have political uncertainty and war kind of uncertainty, gold, silver, precious metals do well. And so that's why that's kind of been starting to set up and get going. Silver, very similar pattern. Although it was a little bit more confusing with, we had this strength going on here, but it never really broke out. And then we had a dive down into $15. All these blue professional bars coming at the lows there, bang. Bought that 1550 kind of level down there, and then we've set off to the upside. So we're breaking a couple of time frames here, low and intermediate. We got cyclical support behind us on the highest time frame. We put on our exhaustion, selling our bullish divergence. So silver's looking good as well. And we're breaking out of this kind of downtrending kind of channel. So that's kind of looking interesting. And platinum, everybody kind of forgets about platinum, but it's part of the kind of precious metals complex. And a similar type thing, support coming on the highest time frame. We're breaking resistance on the lowest time frame. We've had exhaustion sell here on a left shoulder, just like the gold pattern. Bullish divergence kind of comes in. We've tested down and down into this kind of 900 level a couple of times, and we're now breaking out potentially above 1,000 here on platinum. So I think those are all looking interesting, and those moves are starting to get going. Yeah, it was a bit odd. Just had a data disconnect and they kind of restarted charts. Crude, my problem with the crude chart is we've not had exhaustion sell on the downside. The swings in better momentum and the volume patterns have been huge, just absolutely huge. Backwards and forwards, but these moves down here didn't generate a really nice exhaustion sell. Yep, they generated, look at these blue professional bars buying the dips, but we've also had blue professional bars at the highs kind of here. But lately, we've got a couple of time frames being broken. We've got cyclical support on the highest time frame kind of going on here, and we've just been in consolidation at just under $50 here, just waiting, showing strength, but it's not broken above 50. It's not kind of taken off to the upside. So the thing I don't like about this chart is that we've got no exhaustion sell patterns. Look at gold by contrast. There's our exhaustion sell. Bullish divergence comes in, flush. That's nice. But crude, they're all on the upside. So it's not a perfect chart from my perspective. But at the moment, it is showing some strength. We'll have to wait and see. Natural gas, it's the other part of this. That looks more like it. So here we put in pullback to end of trend on the highest time frame. We've got our exhaustion sell on the left shoulder, flush, bullish divergence comes in, flushing out sellers at that point. But this is yet to break into an uptrend. So we've still got white bars still showing weakness, but the supports, we're starting to break above supports, which is kind of good. If we look at some of the volume patterns, potentially that's blue professional bar, kind of getting the move going, maybe, kind of on the downside. You can see the big move in natural gas, where it maxed out above $7, 2014, and then all these white bars, bang, 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 bang. Ending up with a left shoulder here, some strength, but ran into resistance on the highest time frame, and we finally put in that move down there to test into these lows down at $3 on natural gas. So natural gas, I think it's looking interesting. Crude, looking interesting, but this volume stuff is the wrong way round for me on crude. So I'm not convinced of crude. I'm more convinced of the precious metals. Then last chart to show you is bonds. So this is the long-term bonds, 30-year. And it maxed out with our exhaustion buy bearish divergence back in 2016. The end of that uptrend move, pull back to end of trends, go on, and then we fell into this really nice kind of decline here. White bars showing weakness, and it bounced off a triple here. Look at pullback to end of trend on the low, intermediate time frame, syncing up with cyclical support on the highest time frame, and it just set off to the upside here. That's a little bit of a short covering rally in terms of the volume pattern there. We had flush patterns kind of go on, and some strength happening here. But I don't know. I think this is still going to, that sell down at that point. That was Trump kind of victory here on that day. Kind of sold down at that point. I think all we're doing is testing back into that breakdown level, which was really significant, kind of around here. We're kind of playing around that level. So there you can see that resistance is exactly where we broke down last year. So I don't know. I think all we're doing is just short covering kind of rally going on here, and at some point it'll roll over and break the other way. But while we have potential weakness in equities, people roll into bonds to kind of flight to safety type stuff. So we'll kind of wait and see. But that for me is indeterminate. I don't think we're in a strong uptrend, and we certainly haven't started any kind of corrective move again. But any break of these supports, this turns white bars again on the bonds, and then that'll be kind of all over for this correction and then continuation of the downtrend that we started off. And that potentially is set off by discussions on debt ceilings and so on, which is most likely going to happen kind of later in the year. So there we go. Extremely long video. Apologies for that, but it's been almost a month since you heard from me. But that's all the things that I'm looking at the moment. Plus crypto stuff, which is kind of going gangbusters. Hope everybody's kind of jumped into that in some form or fashion. Anyway, hope your trading is going well. Looking forward to more range and volume and speed over the next few weeks, and good trading.